Welcome to readtheticket.com. Today we're going to have a look at a couple of charts, price and volume, to determine what's really going on with the big picture. Here we have the Philadelphia Gold and Silver Index, the XAU. And as you can see by my cursor, it's plummeted from a high of about 250 all the way down to 80. And previous support is near 70. The worst case support is below 50. It's a pretty horrific plunge, and as you can see, it's a pretty rapid decline. Now, if you an Elliott wave theorist, you could probably count 1, 2, 3, maybe call that a 4, and the 5 might be just working out here, where you might get a 3, then a 4, and then a 5 later on. So I'm just sort of saying it is on the end of its run, I would think, give or take 5 or 10%. Considering that after all it's fallen, over 50%. So I think it's near the end of its run. The point about it is we've got a rapid decline. A lot of people who've been holding gold stocks on the back of the gold and silver bull have just got punished. There's something interesting going on within the XAU. I'm going to look at a few gold stocks and silver stocks. Here we have KGC monthly chart. As you can see, price has plummeted below the 2009 lows. Whoops. What's interesting here, you see on the low near $4, volume has pretty much increased at least 50%, and price is not falling, and the range is narrow. On this chart here, we have ABX. This is a large percentage holding of the GDX ETF. I think it's 10%. As you can see, we're below the 2009 low. We have had a large plunge down, and as you can see in this particular case, volume is pretty much doubled, or maybe 75% on average between here and here. As you can see, looking at the range between here and here, the range in the last, this is a monthly chart, the last, I would say, 6 to 8 weeks has been pretty narrow compared to the rest of the history of the chart. So we've got high volume, falling stock price, narrow range. Let's go to another one. What do we have here? This is a much stronger stock. This is SLW. It's a silver stock. As you can see, we have, a falling wedge. We also have a bit of divergence, I think, here, a bit of a divergence on the monthly RSI. Volume is up a bit. As you can see, it is marginally higher. The range isn't that narrow, but it is starting to narrow in the last 3 or 4 months. Volume is up. We've got one more to go. Here we have HL. It's a silver stock again. As you can see, the volume is up quite dramatically. And the range is, pretty narrow the last 4 or 5 months, 6 months I would say, compared to the previous history of HL or monthly. So what do we have here? We have a lot of stocks within the XAU in the GDX ETF that are down. They are down hard, and the volume is up, and the range is narrow. So what exactly is going on? Well, in the Wyckoff terminology, it's simply what they call absorption. We have a tight range, high volume, and price is low. The answer, I said before, is absorption. It's panic selling after a substantial decline has been rapidly absorbed. This is why the range is narrow and the volume is high. Tom Williams called this bag holding. So what this basically means is the price has been sold off. People, it's gone beyond their emotional limit to hold on. They're selling it hard, but it's been brought up with just as much vigor. And it's also been brought up with the intention to stop prices falling. So if you're a strong buyer of this, you want to buy it up, but you don't want to have price keep on falling. With high volume and the trend down, you would have thought, why isn't price plummeting further? Now, that doesn't mean it can't sink a little bit further, but let's go to I think it was ABX. Where is it? This one here, this is outstanding. Look at ABX, the solid stock, the gold stock, look at this. Look at the range is much higher. Here it's plummeted down to $15. The volume, the fund, obviously the institutions, the funds like this, because the retail investor can't do that. So they're buying this up large. Price was falling it. They don't want the price to fall below $14, $15, and they're not letting it happen. So people are selling large lots of shares and buying it up. They are. And I can imagine in a period of time this will be a lot higher. Now it's not a timing tool, price and volume. You can actually see that it could actually take a bit longer. They actually might even encourage it to go longer by the funds. They actually break a few stops, then really push it up high. Once again, high volume on low end can be marked as a reversal, just as high volume on a high point can be a returning point. This is sending a message. I believe it's going to be a strong trend in the future. The only concern with gold stocks or silver stocks is that you really need the metal to rise, the underlying metal. You also need the underlying stock index to be flat or not falling hard or rising. But you can imagine that the gold stocks have been pushed down so hard that there's bound to be a bounce of some sort. This ABX is showing a very strong example. And if I go to GDX, let's see what that looks like. GDX. Okay. Here we are. As you see in GDX, this is the gold, and I think it's a gold stock, gold and mining ETF. Not quite at 2009 low, so you might just get a bit of a washing out here below 20. But as you can see, the volume is extremely large. The range is narrow. Some might call that a falling wedge. Like I said, the volume isn't a timing tool, but you can bet your bottom dollar the institutions and the fund managers, money managers are accumulating this, and they are going to enjoy their profits in the months and years to come. Thanks for watching.